Welcome to today's Explainer. We are unpacking a totally fascinating dynamic that's rippling through the tech sector right now. It's this crazy balancing act in the enterprise software world, trying to juggle breathtaking new AI capabilities against a very real, very cautious hesitation we're seeing in the market. To really wrap our heads around this, we're going straight to the source, looking at Pegasystems' Q2 2026 financial report. Let's get right into it.
Okay, so here's our roadmap for this explainer. We'll start with an introduction to Q2 2026, move on to the AI purchasing hesitation, see how Pega Cloud leads the way, check out their record cash flow generation, break down a predictable AI strategy, and finally wrap up with experimentation to reliable outcomes. Starting with Section 1, Introduction to Q2 2026. So for the second quarter of 2026, Pegasystems reported a total revenue of $420.7 million. Now that is a 9% increase from the exact same period last year. And hey, a 9% jump in top-line revenue? That's a really solid indicator of health for a mature platform doing enterprise transformation. But top-line revenue only tells us a fraction of the story about what's actually happening on the ground with their clients. Moving right into Section 2, the AI purchasing hesitation.
Now, this is where things get super interesting. Hidden in the management discussion of their filings is this incredibly direct, unfiltered admission. Unprecedented changes in the AI market actually caused clients to delay their purchasing decisions. I mean, think about what that really means. We are literally in the middle of a massive tech boom, right? But the sheer speed of all this hype is causing total market confusion. Instead of rushing out to buy, massive enterprise clients are slamming the brakes. They need to figure out what AI actually means for their own business architecture before signing off on huge new software contracts.
And this hesitation, it shows up immediately in the numbers. PEGA tracks annual contract value, or ACV, which is just the annualized value of their active contracts. Their total ACV grew by 7%, climbing from roughly $1.51 billion in June 2025 to $1.62 billion in June 2026. Now, if you adjust for foreign exchange rates, it's an 8% constant currency growth. Yes, it's definitely still growing, but the filing actually notes that this growth rate has slowed down pretty significantly compared to last year. It's a very clear numerical reflection of the entire enterprise market just taking a collective breath.
All right, Section 3, Pega Cloud leads the way. Despite all that broader market hesitation, there is incredible momentum happening within their specific cloud offerings. Pega Cloud ACV shot up from $761 million in June 2025 all the way to $926 million in June 2026. That is a massive 22% year-over-year jump. The big takeaway here is that even when enterprises are feeling skittish about broad AI changes, they're still heavily committing to modernizing their infrastructure through cloud deployments. So this cloud segment is acting like a massive growth engine, basically pulling the rest of the company's metrics forward, even when everyone else is being so cautious.
On to Section 4, record cash flow generation. The absolute crucial point we need to focus on is this massive anchor number, greater than $285 million. According to the release, Pega generated record first-half cash flow. We're talking both cash flow from operations and free cash flow, totally blowing past that $285 million mark in just the first 6 months of 2026 alone. When a company can rake in that kind of cash, even with a slowdown in overall contract value growth, it absolutely proves their underlying business model is incredibly robust.
Pega's COO and CFO, Ken Stillwell, was quick to point out that this record first-half cash flow gives the company the confidence to return substantial capital right back to their shareholders. It's all about incredible financial stability. They aren't just out there burning cash to chase the latest AI hype. They are running a highly profitable, cash-generative machine, and that gives them the strategic patience to simply wait out the market's current hesitation. Let's dive into Section 5, a predictable AI strategy. Alan Trefler, Pega's founder and CEO, put it incredibly bluntly when he said, "Letting language models do everything is risky and expensive." He elaborated that just using AI to churn out mountains of code actually creates significant barriers to the kind of ongoing change that enterprises desperately need. This is basically Pega firmly planting their flag in the ground. They're articulating a strong stance against the current AI Wild West, where companies are just throwing massive language models at absolutely every problem and crossing their fingers that it works. Right now, the enterprise market is staring down two very distinct paths. On one side, you've got the wider industry doing all this chaotic AI experimentation, which honestly usually comes with spiraling, totally unpredictable per token costs.
Every single time the AI runs, you pay, and that can get out of hand so fast. But on the other side, you have PEGA, promising predictable costs. With PEGA Infinity 26, they have this totally unique approach, deploying AI by applying agents at design time to optimize runtime token use, and clients are absolutely loving it. This no-per-token cost approach takes all the fear and unpredictability completely out of the AI adoption equation.
And finally, Section 6, Experimentation to Reliable Outcomes. So, let's bring it all together and remind ourselves why this matters. The core takeaway from this explainer is that the enterprise market is pumping the brakes because AI is just evolving too quickly. Yet, in spite of all this purchasing hesitation, Pega is leaning heavily on a record $285 million in cash flow and a massive 22% growth in their cloud ACV. They're taking that position of immense financial strength and offering something truly radical: predictable AI with absolutely zero per token runtime costs through Pega Infinity 26. They're smartly capitalizing on the market's exhaustion with chaotic AI experiments, pivoting to the kind of reliable, rock-solid business outcomes that massive enterprise clients are desperately craving right now.
All of this leaves us with a huge, provocative question to consider. Will predictable costs ultimately win the AI enterprise race? As this initial wild hype cycle cools down and finance departments start scrutinizing the massive bills for these large language models, will Pega's highly structured strategy of reliable tokenomics beat out the unbridled AI experimentation we're seeing everywhere else? Well, the data from Q2 2026 strongly suggests that when push comes to shove, enterprises value a safe, predictable, and powerful transformation above all else. Thanks so much for joining me for this explainer. I really hope this deep dive left you with a much clearer picture of the current enterprise AI landscape.